on YouTube as well. So that looks like that's good to
Nice.
go. And welcome everyone as we're getting started here today. We have a great session for you today. Today's session is titled Reliable Income Strategies for Dummies. And I'm not calling you a dummy, I'm calling me a dummy. I need
You could
help.
call me a dummy. We're all dummies.
I need
About
help.
something.
And like wherever you're at in your trading journey, your trading experience, we all have to start somewhere. So Anne-Marie and I wanted to take a step back today from our Moneyball series or within our Moneyball series as we've been talking about options, we've been talking about spreads, ways to hedge your risk and put probability in your favor and take a look at the macro perspective. How do we think about the overall market, regardless of whether you're trading options or stocks or futures, in a way that is productive? And so, Anne-Marie, thanks for being here. As always, it's always a pleasure to be working here with you.
It's my pleasure, Jonathan. Well, that was a great introduction, really. And really each of you. Thanks to each of you for being here. Listen, our time is so stretched in a million different ways. And so the fact that you would take time to be here, totally appreciate it. I'm going to give you the very best that I've got. And I don't want us to overwhelm you with macro things. Like there are a lot of really great macro guys out there, but they use words that I don't know. And they say a lot of things about 210s and yield inversions and all of those things. I'm not going to go there. It's not my wheelhouse, but what I do love to do is step back and say, all right, can I see the forest? And I want to show you how I look at the forest and the things that can help you. And we will use the ever useful Thinkorswim. Let's see, how many do I have open here? Let's use, that's screen 2. Let's use Thinkorswim. Right, here we go. All right, and so this is one of the screens that I look at. It's really gobbledygooky. So I'm going to go to another screen and I'm just going to open up something that I think is really fairly important for all of us to know a little bit about, and that is the SPY. And so wonderfully, Thinkorswim can give you candlesticks that are actually 1 year thick. And so each candlestick we're watching here took an entire year to build. So you might say, Anne-Marie, what in the world is the purpose of having to look at something like that? And what you want to think about is a big picture action that allows you to understand the breadth of the market. Okay? And so one of the things we're going to talk about is what does it look like traders are doing? So it doesn't matter any chart you're looking at. If you trade and you're looking at any chart, start at that very biggest chart. And this is the way I think to myself, wow, let's see if price action is going to move up or down. And so very interestingly, because this entire candlestick is 2022. If we look at 2021 compared to 2022, we can see that earlier in the year, we came really close to the bottom of 2021. So here's super interesting and very valid space that occurs. People will look at old support and they will try to buy it, right? So let's say you were looking at the SPY. Let's say you didn't know a single thing about this, right? And you were looking at SPY or any chart that you saw, and you saw it retracing your candle body, but that everything was moving straight up, right? Everything was moving straight up, and you had a moving average that was to the upside. So if any of you would like to have, I can't give you this one because that one's copyrighted. But if any of you would like to have the custom studies that I have here, both on the bottom and on the top, I can also share that with you. We've shared a few things in times past, but if you're a little bit newer and you haven't done that yet, very happy to share the formations with you and get you a chance to see how really straightforward it can be to work in the market, just looking at price and just comparing your particular price action. If you see my eyes darting to the left or the right, it's because we have a butterfly on right now that members have, and the price action is finally expanding into the place that's going to start giving that butterfly some traction and allowing it to move into some very pretty price patterns. So just have my eyes on that. We'll be checking that out shortly. So here's what I would like for you to look at. If you see price action coming down and you've had bullish motion, the first thing that you should see is the price lift. So the goal of the trader to last as long as they can last in the market is by managing risk. And so we want to squeeze that risk in. And the way we squeeze that risk in is getting our stop to be as close as it possibly can to be for us. Okay? So what we do is we look at it here, we see it come up, and that would be a place that we would buy. Notice what we would want to do is let it come in as close as possible, and then allow it to lift. You don't want to buy it on the way down. You want to buy it as it begins to bounce to the upside. And we're going to see that, how that looks from a quarterly and a monthly and a weekly space. This was our COVID event. It was pretty savage, but you can also see it was pretty short-lived. And look, it moved just a little bit down from this area. So again, you look, and if it's moving straight up, you look at the motion and then you wait for it to recover into the areas of your candlestick body. This is supremely important. And really, before I put on any kind of trade, whether it's a stock trade, whether it's an option trade, I'm always looking at this. I do not place trades in the options market based purely on Greeks. I do it all about price. So now let's go to the next space. Let's go to candlesticks that are quarterly in size. So now we're going to look at a candlestick that is 3 months wide. And we just have the 3 lines. We have the COVID action. And then we have this action just from earlier in the quarter that this happened to us. So notice, here's a fade that just walks straight down through all of these candles. There it is right there. It walks through them. This fade opens up 1, 2, 3, 4. It erases the entire year. If you're noticing this, right? It erases the entire year, and then it begins to lift and recover. Do not put limit orders down at the bottom of support until you know that that support has held, unless you are a scalper and you have very defined risk. That's supremely important. So
that was like 2 or 3 points there. That was a golden nugget right there. So could you repeat that? Because
absolutely.
And for some people on
I'll
here,
write it.
All right, awesome.
Yeah, I'll write it. So add a drawing. Let's do some text. Let's just put some gobbledygook right there because I'm going to have to make it big. Edit properties. Let's go to, maybe we'll choose an 18 font. And then let's try it again. So Number one, you use a tight moving average. You can look at it like here. This is a 5, right? No, you have to look at slope. That because you're interested in what the market has been doing. So you look at slope, and that slope needs to be very important. It needs to be upward if you're going long. Right? Why? Because you want the weight of the market to push you forward. That's what you're looking for. You don't want to be the maverick out in the cold looking for something to happen. You want to go with the flow and not be the standout, because it's the amount of money moving at a particular price that makes your trade go properly. So that's the first thing. The second thing, as I write, you're going to be able to see what's going on here. The second thing you want to look for is, if you're looking for a trade and the trade has, let's say you're looking for a long, but you've got a series of candlesticks that are a little bit sideways. Notice how this formation is different to this formation. You see how this formation is, hey, listen, I get involved at the close of my last candlestick, I pull down, and then I turn around and move straight up. And then this one, I just start moving straight up. And this one, I move straight up. And this one, I move straight up. And this one, I move straight up. Here, I pull down a little bit. I don't close above the last close of the quarter. And then here, I gap down just a wee bit, and I close over the last close, but I don't breach the high of this candle. And so look at how they're crunched together. Here we can see a clear stair step. If you're walking up stadium steps, you can see easily, oh, that's bullish. I'm going higher to the top. If you're looking at something like this, it ends up being some kind of MC Escher kind of thing, right? He's the guy that makes all the stairs go in different directions. So you want to step back and go, wait, am I inside of the range of my last candlestick? That means I'm going sideways, so I need to be careful. And what I want to watch for is a nice pullback that can let me go long. So let's say the pullback begins and you're really interested in going long, and you go, well, I saw the breakout there. I see support here, and I see support here, but, you know, old resistance, new support. I might try it over here. The one thing you want to say to yourself, if you have candlesticks that aren't making nice upward progressions, all of them together, it means hold the phone, you're going to have a fade. And that sort of thing happens all the time. So how do you capture a fade at the baseline of support? Well, a lot of us go, just put a limit order down here at support. A lot of us do that. And what happens? We get blown out. So instead of doing that, put an alert at support. So some of you are going to go, come on, Anne-Marie, I've put alerts and the market's just flown by me. Yes. But when the market does that, it's in a different mood. And so what is that mood? So if you look at this and you go, oh, well, my pullback down here, my support's way down here. So I'm going to set an alert for that and wait. See, that's not the mood that the market's in. How do you know? Because every candlestick before is closing higher than the last candlestick. So until it stops doing that, you can't look at something and go, okay, I'm going to put an alert down here for support and I'm going to wait for it to come. Because that's not the mood the market's in. The market, that mood right there that we're looking at The market's going, come on, hurry up. Here, the market's digesting all of this upward pressure. And so when you see this digestion, a la, I'm inside the range of another candlestick. It just has to happen one time. Just one time will tell you the storyboard. Once you see something like that, once it breaks and you start trading right on top of that moving average right there, start thinking about where that support is and set an alert. If it loses that support, don't think it's a short, right? A lot of us go, well, it lost support, it must be going down. That's not how that works. Why? Because the mood is still upward, right? So if we lose support, don't immediately short. Because the market might be just overdone, right? Now think of it. Here's the next one we're looking at, right? Now notice this, these are quarterly candlesticks, so you have to have patience. If it comes up here and holds this level, guess what? You can trade at the end of the month. You could trade at the beginning of the next month. But what you do know is that your stop is clearly defined. Okay? So that's what putting the alert does. It allows us as traders to have a clear, defined stop. So why is this important for us to know? Because what we want to do is get in the market and not draw down so that our portfolio balance goes in peaks and valleys. We want it to go straight up. We don't want it to go in peaks and valleys. And so if you can find this place where you go, oh, all right, I see that's where my stop is. I'm okay with that. That's going to give us that opportunity to say, you know what, I'm going to wait until it's safer to engage. And once I hold that old support that I can see from way back when, I'm off to the races. All right, COVID comes, super surprising. Let's talk about, let's say we got in the trade here, now we're looking at it, and we're moving up through these spaces. Again, same concepts that we use for Moneyball. We say, what is this doing? Well, it's moving up. Here's the number one thing you want to do. Anytime you're in a trade and you start the next candlestick and you bounce to the north and then you lose the close of the prior candlestick, it immediately means if you're long, you need to take a little bit of profit. Why? What does it mean when a candlestick falls into and below the body of the prior candlestick? It means that all the work the traders did at going long and closing higher has just got a gut punch, right? A punch to the gut where they go, oh gosh, I thought it would hold. They immediately begin to trim. This is also algorithms. Algorithms will immediately begin to shift and find the balance and allow them to move in areas that will allow them to have that swift move to the downside or swift move to the upside. So as soon as this begins to happen, you trim a little. Then you look for the last place that was resistance, that became support, and you say, you know what? If it loses there, I'm going to cut and run. That's one of the best things that you can do for yourself. The absolute best. Now, why? Well, you have no idea how far down it'll run. You really don't. What you do know is if it runs down far, it better hold this one. And if it holds this one down here, you know, just like this time, you've got upside pressure. And so that upside pressure is going to be that space where you go, you know what, that's bouncing. Now, here's the psychology of this. This was COVID. It lasted less than a quarter. It really was only 3 weeks of motion, downward motion, but it was very savage. And so we all come in and we read the news and we get scared to death and we are unable to make decisions, not because of what is physically visible to us from a macro perspective. And that's what really this is. The macro view is really what's price doing over the long form, right? Not what people are saying about macro, not what political chatter we're going to see, not what scary things might be in the news. Look at what big money is doing with price and try to believe it. Now, I say try to because I know it's really hard. I know it's incredibly difficult to do that. Okay? So, what we want to do is wait for it to do this and then begin to buy. Some of the biggest trades that I made came right in this quarter because I looked at this and because I look at these things every day to remind me what's going on. It reminds me what's going on. Then I can go, oh, all right, I got it. I understand this needs to hold. I know my stop is still around here. And so I'm going to wait for it. So what do? I wait for the limit order to be put in after the price action has bounced above the support because it gives me a defined risk. All right? So we don't place a limit order at the base of support unless we're scalping. Or we have a very hard stop. That's really it. That's it. Because what's going to happen is more than often you're going to get stopped out. How do I know this? Yeah. I've gotten stopped out so many times. So how do we prevent being stopped out? Well, we wait. But Anne-Marie, I won't get the bottom. But Anne-Marie, I won't get a good price. Yeah, you will. You will. You'll get a good price, especially if it's going to run. All right. So here we are. Once that happens, there we go. Place the limit order as close to support after that support has held. So what does that mean? What do you mean by that? How do I know that support's held? Again, we're going to look forward. We see what's going on here. We know what happened in the future tense. Let's look at how this actually looks. Now let's go to a monthly. The further back you take the time to look at your chart, the more you'll understand what's going on. Without a doubt, the more you'll understand. So have a peek. Here was our first dip, right? This was the month. The very next month it opened up and it started running. So let's say my support was here, right? At this edge on the breakout, but maybe it actually wasn't there. Maybe I decided to put it on the wicks down here, right? Maybe that was it. And you put that alert there. Your job is not to pick a bottom. Your job is to get in for the big meat of the motion. You want the big meat of movement. All right? So the great big drift, really, from this month, it was just 3 weeks that it moved down and then it started moving up. Let's say you're looking at these, you get scared to death here, You don't follow the old resistance, new support if it gets broken, and you wait. Now you've got a massive drawdown, okay? Especially if you bought up here on the run to the upside. That's why it's very important, very, very important to take a look at these monthly, quarterly, yearly candles and see, hey, am I above the close of last month? Am I below the close of last month? Am I above the close of last week? Am I below the close of last week? These things are incredibly important to help you make good decisions. But notice here we have this monthly, and there are a number of ways we could have positioned in here to go long. Absolutely. If we're waiting on a MACD or a momentum indicator, we would have to wait for a while. But my thought is always, I want to limit my risk. And so I'm going to wait for the test of support. Notice, crashes through, closes above it. That tells me that if I come down into my support and I hold it, I'm in good shape. So what does it mean, hold it? Well, I might dip, but it's going to come back up and hold that zone. And so again, the monthly candlesticks tell us. So let's go to where we are currently right now, and let's talk about what is price action really doing. Do you have any questions, Jonathan? Do you want to pause for some questions?
Well, if anyone has questions, please throw those in the chat.
Okay, great.
My question
so we don't
was,
yes.
do you wait for the candle to close?
Beautiful.
In order to say, all right, this is bouncing.
Yes.
Or okay, yeah.
The candle that's broken it must close. Now, if the candle hasn't broken it, you can take it inside of that candle. But there's got to be a candle break. And some traders say, listen, wait for 2 candlesticks to close above a level. You can write that one down. It's fairly solid. You wait 2 candlesticks to close above a level, and then you're going to have some upside pressure that is likely going to hold. Okay, now just because it breaks the level and then tests that level again, you want to see where it closes. So it's the close of the candlestick after the break, right? So I like to use 1 candle because I'm aggressive. 2 candles do a great job, right? I mean, here, 2 candles would have done a great job. It would have put you along here. Here, 2 candles would have put you up here. This works because the big picture is to the upside. Because the big picture's to the upside, you know the price action is going to try to recover. Okay? So here we are. Now we're looking at this. Let's take a look at what's happening now. Now, if you recall, the yearly candlesticks show us retracing the baseline of the bottom of the close of the year. That happened last month. And now we're trying to bounce. But have a look. Take a look at how nervous the market participants are. So you might say, what do you mean? Why would you say they're nervous? And they're nervous because we're sitting underneath the moving average, right? So that's the first thing that is detrimental to pure upside action. It's sort of like this. Ooh, I'm underneath that tight average. I'm a little bit nervous. I'm probably going to sell off before I bounce. And so the moment it started getting underneath this moving average, things started getting a little sticky. So now we have a resistance edge that's kind of around this marker, and that marker is, what number is that? 453 or so. And so what's happened is every time this chart tries to bounce, people are selling it. So in the wonky language of market action, it means that supply is plentiful, and the buyers simply cannot eat all of it up. They just are saying, you know what, I can push up so far, but then supply becomes overwhelming and they push things down, right? More supply means prices go down. Let's think about it in this way. Let's say I have 1,000,000 diamonds sitting on the ground and they're all 2 carats or more, and literally you find them everywhere you look. It's like dirt, right? That's a lot of supply. So that means if I want to sell them, it's going to be like salt. It's going to be very cheap. But the moment supply gets eaten up and demand takes over, and there are only 2 diamonds of 2 carats or more sitting out there, people are going to begin to bid for that space. And so right now, we have a lot of supply sitting in the market, a lot of supply. And it's making traders nervous for one reason or another. And they're nervous because of the bullhorn that says the Fed's raising rates or whatever it is that's making them nervous. And a lot of money is slipping out of that market space. And so for me, you might say, well, Anne-Marie, why are you looking at something like this and to go long? Here's the thing. I have a candle. That's my support zone. This candle is my first candle to close above my support zone. So over here, I'm anticipating that I bounce back up into resistance and take the short-term trade into that upward bounce, because I'm using the same rule of if I hold support and I close my first candle above that support zone, didn't happen until here, this is the candle I go, you know what, I'm going to try to go long. So that's the reason behind my particular trades right now. Because the market's very volatile, I'm extremely concerned about risk. Risk is huge. In this particular market, we're seeing drawdowns and whipsaws like it truly is a dumpster fire. It's a mess. So my thought is I'm going to use somebody else's money to help me cushion that in the mess. And so that's why we sell options against the options that we're buying, because I really don't want to put a lot of my money at risk. It's just the market makes me nervous right now. And when the market makes me nervous, I become very defensive. I don't change my rules. I use the same rules, but my entries in and out are very relative to short-term motion, and I'm always going to use somebody else's money. And so this is what we're after right now. We're just going to move it up. Are we going to have a great big trade that holds a long time? No. Why is that? Because this moving average is down. And if this moving average is down, it means no matter where I bounce, somebody's coming in to sell me off. I don't know where it is, but they're coming for me if I hold it. And so my thought is, you know what? I'm going to be preemptive. Last month's high is going to give me something that, you know, I can look at and go, oopsie. I can look at and go, you know, if I get all the way up there, I don't really think I will. But if I get all the way up there, that's probably going to be the end of my long trades. I'm going to start looking for the market to tell me what direction it wants to go. So the exciting thing about this is that you literally can use it anywhere, at any time, with any chart. And the number one things to prepare yourself to look at are, is this liquid? Meaning, do I have enough action going on here that if I wanted to sell, there would be someone that would buy it from me? And then, am I paying attention to price? Not thinking about, ooh, where could this go? Listen, a lot of us have gone straight down the chute. thinking, where could this go? I can't even tell you how much money I've lost looking at something going, ooh, where could this go? And have it fall back and go, I'm just going to hold it a little while longer because I hate to get out because I've got this, or I hate to do because I've got that, right? Your reasoning doesn't matter to the market. Only price matters because you only get paid when you buy low and sell high, or you sell high to open and buy low to close.
I mean, this is so key, Anne-Marie. So thank you for sharing that with everyone. And I mean, this might seem anyone who signed up for this thinking it was going to be just like do this and then you make money. It's sort of, I mean, it's a system, but it takes practice. It takes practice to recognize these trends. Now, what's helpful is inside of Benzinga Pro, Anne-Marie is giving you daily market updates. So if you're practicing looking at these yearly, quarterly, monthly candles, weekly candles, then it gives you context in which you can view these shorter term, day trades or swing trades. And so, so is it all right if I go ahead and share my
Please,
screen?
I was just going to ask.
Perfect. So then I'll go ahead and let's see, I've got Benzinga Pro here because Karan in the chat was asking, well, where can we find Anne-Marie? And so anyone who's not familiar with this already, you can find Anne-Marie's chat right in Benzinga Pro. So you guys should all be able to see that right now. And there is a link in the description on YouTube, as well as I'll throw a link in the chat for the Zoom meeting. But basically, you're on Benzinga Pro. There's all sorts of professional tools in here. As you can see, there is a chart in here as well as on your brokerage. And you could use, like I've got monthly. We don't have the yearly candles on here, but we do have the monthly, weekly, and daily. So that you can do within Benzinga Pro. And then you could throw on your indicators like a moving average. It'd be under simple moving average. Apparently we have lots of moving averages. There we go. So I've got a moving average, and I could change that to a 5 instead of a 9 if I want to do what Anne-Marie is doing. And I can change the way that looks with the style. Maybe I want to make that white a little bit brighter. And so you can do this technical analysis just like we're doing here inside of Benzinga Pro, and this is giving us context. And then with all of this background, Anne-Marie is giving us daily updates like this morning. Here's an audio update within her chat room, and up here, this might look a little complicated if you haven't been following along with us on our other webinars, but she's telling you exactly how she is trading off of this price action. So she tends to post some option trades in here. And what you did, Anne-Marie, at least what we were talking about earlier, was you were saying, you know what, you could put on this butterfly trade, which is basically a combination of two option trades, or you could just buy a call and then have a very tight stop. And in that case, you would have been stopped out. Just like, almost like you were just talking about a few minutes ago, right? So hopefully this is how you can take all of what we're talking about, the technical analysis, the economics, other news catalysts, and then bring that into actual trades. And if you are brand new, you have someone to kind of walk with you through this journey and start trading profitably. So Anne-Marie, do you want to add any more context in terms of what you're really looking for when you give these morning updates, or when you are when you're like, okay, now's the time to actually take a trade?
Yes, I can, but what I just did was close our SPY butterfly for 100% profit. It just closed at 50 cents for me, so I'm getting that data to us right here. So I'm putting it in the chat box right now. And then I will answer that question just a wee bit better.
Awesome. So if you guys, for anyone who has been following these trades, if you're in on the SPY butterfly, that was a SPY, not the Qs, correct?
Correct. I'm going to check the Qs right now.
All right. So then Pazoo in the YouTube chat, he or she says, I bought the Q's butterfly Anne-Marie mentioned yesterday, this morning, for 29 cents. It's now
yes!
in profit. So good job.
Amazing. That is awesome. That is awesome. So, the Qs are not behaving as well. So I think I'm going to cut that off for about 50% profit. And we're going to just take what the market gives us instead of holding out for more. All right, let me see what I can get here. Looks like 78. Yeah, we're going to cover that. I just don't. The market is so persnickety right now. I just don't want to. I don't want to take any chances.
So you're closing the Qs trade?
Yes, I'm closing the Qs also. Yeah.
And so this is where the price action, right? What the market is doing, that fear and that supply of shares that people are selling comes into play in terms of how we decide when to enter and exit these trades. So Pazoo, it's you're the one that ends up pulling the trigger on your own trades, but
exactly.
But this is what Anne-Marie's doing with her own money.
Yes. And so a lot of times folks will ask, hey, yeah, we're gonna see a fade because I just saw a bunch of single prints here. So yeah, we're gonna get out of this. This is good. Yeah, a lot of times we'll say to ourselves, I don't know what's gonna happen here, so I don't know about taking this trade. I define every time, listen, here's what I would do. Here's what I'm looking at. And sometimes things happen and we go, gosh, I haven't heard you say anything about XYZ. If I haven't said anything about it, it's because I'm still sitting on it, right? I will hold to wherever the price action is telling me that it's going. So what I don't like right now is the Qs lagging behind in this particular space. I just don't. I think that's not. It shouldn't be doing that. It should be doing something else. And you can see it's already dropped 10 cents since I pulled my trigger. So you can leave that at, it might bounce again, to be honest. But this market is just so dreadfully erratic. It is just insane. Yeah, the goal, a lot of times people go, I just want to know when to get in and when to get out. And that takes many, many years of understanding. It truly does. The key event is here's the thing. A lot of times we listen to videos like this and we go, oh yeah, I got it. But you don't use it.
Right.
And you don't practice it. It's sort of like me watching a bunch of guys throw a baseball and go, yep, I got it. I see. But I don't use my own body mechanically there. You're going to have a knowledge gap that can only, here's the 50-cent word for the day, be expressed experientially. That means your bones literally have to experience it. And if you are the type that loves learning, and you say, okay, I just want to learn one more thing, and I just want to learn one more thing, you're going to turn into an armchair quarterback that really you're never going to really know how to play the game. You might know the rules, but you don't know how to play the game. And so this is something incredibly critical that a trader has to come to terms with, that when you get an idea on board, like this one, which I can't even tell you how powerful this idea is. It's so powerful that you have no idea how powerful it is until you're well past it and studying something even more in depth, and you go, oh, I could have done that just knowing X, Y, or Z. And I promise you that is so desperately true. So very, very true. We have a tendency to overcomplicate. If you just start with one moving average and you look at those candlesticks and you go, am I moving up stairs that are going consistently down, consistently up, or am I doing something that belongs on, what is that crazy show they have where Ninja Warrior or something, American Ninja Warrior, where they do insane things? Yeah. If it starts feeling like that, you have to pump the brakes, push back from your desk and go, wait, where is support? And then you have to wait for it. You've got to wait for it. I'm going to tell you, the most trouble I've ever had in my entire trading career has been with patience. I took a personality assessment. My sister used to work for this Fortune 100 company, and she did all these analytical things of personalities and whatever, and she sent me this test. And it was measuring all kinds of different traits. Out of 100 people in a room, there would only be 2 other people that were more impatient than me. I was that impatient. And so I'm going to tell you, it put a spear in my trading. It decimated me. I just had to learn to wait on price. We know what's statistically and probabilistically likely, but we don't wait for price action to unfold. How many times have you looked at something and said, you know what, it might come back there, but I'm not going to wait. I'm just going, because if it leaves without me, it's da-da-da. And you get in there and you take the trade and it draws down and you're, oh my gosh, please come back, come back, come back. Or you double down and your risk profile expands. And see, this is what I'm here to do. I'm here to help you manage your money like a professional would manage their money. It's the way I manage my money, in terms of looking at it every day going, if the wheels came off of this bus right now and I went right down the drivetrain, what's going to happen? And so that incredibly important piece of risk management allows you to make money over a long haul, but in a nice, smooth line, where if you expanded everything, you might have little ripples, because everybody does, but you're still going to be moving up and to the right in those weights that matter, and you don't live with that psychological peak and valley event that does so much damage to the psyche that, I mean, it's really very subversive when that happens. You become afraid of everything. And listen, you cannot do anything well if you're afraid when you're doing it. We know that to be true, right? If we're watching our kid, we're helping them ride a bike. If we can remember riding a bike, if we can remember driving a car for the first time, all of that, oversteering, whatever it is we're doing, we're not doing it well because fear short circuits the prefrontal cortex. And so my goal here with this risk management is to empower you to the space where you go, you know, I have a healthy respect for the market, but I am not fearful of engaging. I might be nervous, but I'm not scared. That's my goal, to walk you through those steps. So when you come into the morning and you see, I like, you know, for me, I look kind of haggard when the day begins. So it's it's because I'm old. But so it's a lot easier for me to use audio and be in video later on in the day. But what you'll hear me say is, here's what the SPY's doing. Here's what the Qs are doing. Here's where I think price action is going to go. I think we're going to come into these low areas and then bounce. If we come in before the low areas hit, we could get ourselves a quick short into that support, and then we're at the baseline and we watch things to move. But I expected that to happen anyway. That's why I put on the butterflies yesterday. And then those of us that were really very serendipitous for that to happen, you come in, the market moved in your favor to get it at a cheaper price. And so instead of making 100%, you know, you made 200%, which is absolutely fantastic.
Absolutely. I forgot that whether or not I was on mute there. But I mean, so for everyone here, like, these are not YOLO trades. So like when we're talking about making 100%, 50%, like don't get us wrong, there are stops involved. And like you can lose a portion of your money if you're wrong, but then the upside is so much greater, and we're using trends to look at where statistically we're more likely to win. And so someone, Esther, oh hey Esther, I think we talked before. She was asking, are you still bearish with Amazon? I didn't get in at 39 cents. So I was just bringing up the daily, weekly, and monthly charts on Amazon.
I am still bearish on Amazon. And so Target did a really nice job of just sticking it to Amazon this morning, because I think Amazon is running in sympathy with Target. But let me take the screen back and show you how the formations look, right? And we'll use Amazon, right? Perfect. Remember, the goal is always, can I find a rhythm and replicate that rhythm? Right? That's really what we're looking for. And so where are we, Anne-Marie? Here we go. All right. So let's start with Amazon. I know somebody asked something about an application event, how much of X, Y, or Z. Maybe we can answer that later. But let's take a look at Amazon on a quarterly chart. Can you see, just learning what you've learned from me about how I look at positions? Now, this is going to look like this because Amazon had a 20-for-1 split, right? So this is cost adjusted. And so everything's looking from the little itty-bitty spaces. But what I noticed was Amazon, of course, began to have a fairly savage fade because tech was getting beaten to a pulp. So that was the first thing. And so now let's telegraph all the way into the month so that we can see particularly why would I think Amazon is a short. And so let's have a look at it. Now remember, I don't think Amazon is a massive short. But what I do think is any bounce Amazon takes is going to fail. Now, why? Well, I'm sitting under the moving average, right? Under the moving average. Here's the support zone from 2 months ago. Last month, we bounced and we closed under it. And now I have this space. Now, I could buy a put outright, but if this chart bounces, it's going to shred me, right? Now, if it does bounce hard into this space, I'm going to add another put. It's just, as a matter of fact, since we're here, I'm going to put an alert here above 138. And if it opens up, I am going to, again, first thing I do, set the alert. I'll watch it breach and then see if it closes underneath. And at that point, I'm going to set the trade up. I'm not going to put a limit order here. Why? Because this market's crazy. This market is just bananas. It's got wicks that are monstrous. It's just doing all kinds of crazy stuff. And so if I look at something like this, no, I'm not going to do it. So I'm going to wait for it to come up and then lose its level. And then I'm going to add another put. So here, just like I looked for something to hold support and go long, I'm looking for something that's lost support so I can go short. Knowing that I have these big wicks, the next question is, well, if I'm going to do that, do I want to put a lot of my money at risk? And the answer is no. And so using the butterfly, which is two spreads sitting together, I'm going to use other people's money to buffer my exposure, and I'm still going to do well. So butterflies are usually cheap, right? I try not to spend any more than 75 cents on a butterfly. Sometimes they're $1. Sometimes they're a little bit more than that. But again, what I'm looking for is 50% stop is usually our threshold. Sometimes it's a little wider. But we're looking for that bounce up into the next area. So we're putting small bits of money to work, and we're amplifying those returns very quickly. So we're minimizing our loss threshold as normal as it can be, and then making our gains really good. So for me, I'm thinking to myself, listen, the Qs could bounce. I'm just not taking any chances. So I'm going to step out with a 50% gain, even though I wanted 100. I can't look at something and just go, well, 100's coming. I have no idea if 100's coming or not. I really don't. So this kind of formation tells me, all right, I know I've got downward pressure. So yes, the answer is yes, I'm still short. I still believe Amazon is a bearish play. I would love for Amazon to bounce and fade so I could add. I think it's going to be a nice position. But you notice that the Amazon trade is into next month. It is July the 15th. It's not the quick snap trades that we have that expire, say, tomorrow or the next day, right? So yes, that is how we would do that, and that's how that would work.
Awesome. Well, this has been a great hour, and just for everybody who's brand new to this, just know that Anne-Marie does post those longer swing trades that might expire in a month or a few months, as well as those next day expiry trades, like
Yes.
we just did recently, last week actually. We had a next day expiry, so it was just an overnight trade, real quick. So that way you can kind of combine your experience with the short term and the longer term
Exactly.
trades. So I will post those links. You can get 35% off of Benzinga Pro, and the Essential Plan does include all of Anne-Marie's trading and analysis on a daily basis. Let me know if you have any questions on that. I'm posting this into both of the chats right now. And
You know what
yeah,
sorry, one last thing before I let you take over. What I will start doing is I'll put these price points so that you'll see from the stock perspective, here's what she's looking at.
Mm.
She saw the break here, and so she's looking for it to hold under there. She saw the break here. She's looking for it to hold above there. And then that way, those of you that aren't really well versed in that option space can sort of learn both things at the same time. You can go, oh, this is the strike that I would use, or oh, this is the whatever that I would use. And then that combined with understanding the real price action ends up giving you that double boost of strength in terms of understanding what the market's got to give.
Absolutely. Well, thanks again, Anne-Marie, and
My pleasure.
we'll talk
leave
soon.
You to it. Yeah, I'll leave you to it. I'll see you on the next time.
All right, thank you. And so just for everybody else who's new to Benzinga Pro, I pulled up Benzinga Pro here, and I just wanted to give you a quick rundown of everything else that's included with this. So this is one chat room with Anne-Marie where she's sharing her trades that she takes with her own money. So, I mean, there's a lot of stock picking services out there, option pick services, but these are trades that Anne-Marie is actually taking. So live on this session, she was exiting one of her own trades that she recommended to our members. And you can see how she posts them in here. And we have a whole library of content as well in terms of how to execute these. Or if you reach out to me directly, I have some additional videos to give to you. Now, there's other chat rooms in here. There's a lot of other professional traders that are posting what they're trading inside of Benzinga Pro. You can also get live updates with what's going on in the market from Benzinga Charlie, who will give you Squawk updates where he has a proprietary news feed, and as soon as he sees something that moves the market, he will broadcast that to you. So you can get live updates there. And for any of you who are brand new, I really like this what's moving scanner setup because it's so easy just to see what's moving each morning, and then very quickly you can pull everything up on the other side of your screen here to do some quick research and run that technical analysis on maybe like a 5-minute chart. This one's super choppy. Let's find something else. But on a 5-minute chart, you can see where these stocks are moving and where those support and resistance levels are for a day trade or a swing trade. So this is a really nice setup here. You can do your technical analysis inside of Benzinga Pro, and you can see what news is causing that volatility using the details tool or the news tool. So you've got all these different types of professional tools. There's also, where's my day trading workspace? So if any of you are trying to day trade, here's a nice day trading workspace. We've got the signals tool, which will show you highs and lows. Right now I have this set for 52-week highs and 52-week lows. I could set that to session highs and session lows. So that'll give us a lot of signals there. You can see as they're coming in. And you could filter that down. So if you're new, don't get overwhelmed. This is more of like an active trading workspace. You'll get halts in there, unusual options activity, and price spikes as well. And then down here we have the scanner, so I can just see which stocks are spiking the most in the past 60 seconds or the past 5 minutes, and then other things like relative volume, VWAP, market cap, things like that. So very easily I can click on those tickers, bring up the charts, see what news is causing that volatility, and we're good to go. You can see here with AeroClean, well, it's really taken off today. And this was a mover from yesterday. So this is an example of where you could have seen this move from yesterday. And if that was just on your watch list again, I mean, look at how that took off on high volume today. So you can do all of this research inside of Benzinga Pro. You have access to Anne-Marie's chat room. So she's giving you trades on a daily basis. And then there's also this ideas tool where you can share ideas with other traders. So like here, Matt Maley, he's one of our expert traders that publishes newsletters for us. He's giving you the ticker ERY, This is an ETF. And he has done a great job making money for our users, both on the upside and the downside, because he just buys an inverse ETF when he expects the market to go down. Nick Shaheen is our options expert. Gianni does swing trades, momentum swing trades, and you'll see Anne-Marie's trades in here as well. So you've got the stock and option ideas, you have the professional tools for research, and you have the active scanners for making those short-term scalping trades on like a 1 minute or a 5 minute time frame. So yeah, thanks for being here, everyone. I see you there in the chat, William. And Sahaner, if you need help, go ahead, give me a call or an email, and I can help you out. Thank you, Esther, Karen, Pazoo in the YouTube, and I look forward to talking soon. All right, don't miss out on that 35% off, and I will see all of you soon. All right, take care. Lloyd, if you sent me an email the other day, try sending it again. I'll throw this in the chat one more time. It's Jonathan@benzinga.com, and my direct phone number is 313-488-0294. So I apologize if I missed something, but definitely want to help you out. And I'm going to hop off of here, and I'll be at my computer. So if you send me an email or call me, I'll be on there. All right, take care, everybody. I will see you soon.